There aren't a lot of guarantees for mutual fund investors, but one of them is you can know up front what your fees will look like over the course of your investment period. And here with some excellent news on lower fees is Brendan Conway. Brendan, I understand there's some fees moving lower in the world of exchange-traded funds.
That's right, Jack. Yeah, so the world's biggest fund company is BlackRock. Mm-hmm. BlackRock also runs the world's biggest exchange-traded fund company, which is called iShares. Right. And they have just announced that they're cutting the fees on a bunch of popular ETFs, and they're moving them into this group that they call the core, right? All the core is just a marketing term for sort of plain vanilla buy and hold ETFs. Right. And some of these cuts are pretty dramatic. Like there's one of them for a popular dividend ETF. That one is moving from 40 basis points, which is already pretty low, to 12 basis points. It's basically free in terms of the management fee.
It's pretty cheap.
It's free.
How does this compare? Now, is this brought on by the other guys out there like Vanguard and Schwab? We're seeing these fees move lower all the time. So I guess this is just simple price competition here.
Yeah, you know, Jack, if you ask them, they won't say that. But we all know that kind of the big mover in this field, and the fees have been dropping for years now, the big mover is Vanguard Group in kind of squeezing the rest of the asset management industry. In this particular part of the business, ETFs, Charles Schwab has come in. They're charging like 4 basis points for some of their ETFs. It's free. Yeah. So, you know that the big guys feel the pressure to compete.
You know, and it doesn't sound like a lot of money, but if you can find a way out there, let's say to save 1/4 of a percentage point on your fees. If you take a look at where, let's say, bond yields are right now, the 10-year Treasury yield is just over 2.5%. So 1/4 point in today's market is not nothing, especially not nothing if you compound that over a long-term holding period. I mean, are we people who are looking to put money into ETFs right now, should they really just be shopping on price? I mean, among these big guys, they pretty much equal in terms of what you get?
You know, I would say don't shop just on price. But Jack, to your point though, I mean, the price makes a big difference if you're holding for a long period. And in this case, I think to myself, the best studies out there tell you that the long-term return of the stock market is something like 6% annualized, maybe somewhere in that ballpark. Now you might want to think it's a little bit lower. If you can save 0.5 percentage point, if you can save 1 percentage point, that's like getting 1/5 more money than you otherwise would. That's how I think of it. So small percentage points are small differences, things that look small can make a big difference.
You know, no one can tell me whether the market's hitting a high right now or what 10-year returns for stocks are going to look like going forward for certain, but you've showed me a way to save us an extra sliver of money each year, so that's helpful. Thanks, Brendan.
Thanks, Jack.
And thank you for watching.